down. You need to do what you need to do, but let's talk corn, soybeans. I'm going to read something to you guys. This was sent. I don't even know if Emily's seen it. I'm going to start off with Emily. But Corey sent this out on his in his Brazilian newsletter. And let me read this to you. This first paragraph. This came out, 2 weeks ago? Mike's probably seen it. Here it is. It says, is it just me or does the world seem upside down these days? Brazil's on the cusp of producing 6.5 billion bushels of soybeans. The U.S. is just above 4 billion bushels and treading water there. Brazil biofuel policy is clear, whereas the U.S. has been treading water for 2 years waiting on details on RFS and 45Z. Brazil has cheap beef, relatively speaking. The U.S. has expensive beef. Brazil is adding new corn ethanol mills on a weekly basis, and the U.S. is trying to maintain what it has. Brazil continues to expand area, while the U.S. is waiting on government payments in February to try and keep the bankers at bay. That's not looking good on our part, is it? But that's the letter that comes out. He specializes in what's happening in Brazil and how things are playing out in Brazil. I know Emily just came in on a plane last night. She's flying back out. Where are you going tomorrow, Em? You got these mics hot?
Yeah. No. That was my error. No, I'm happy to be here, and then unfortunately I have to leave at 10:30 to fly back to Washington, and then I head to Pakistan. So.
But I'm going to give Emily the honors, because in 2024, when she was here 2 years ago, Emily told us all, get ready because winter's coming, remember? Oh, hell, winter came. Winter came, and now we're going to kind of see what Emily's thinking, and she travels around the globe. And I thought we need a global perspective because we're getting beat up a little bit globally. And there's some interesting dynamics that Doud and Switzer and the crew and everybody's going to talk about on some global things and also here domestically. So it's a great session. This one, you pay close attention. Emily, give us your thoughts.
All right, thank you so much. Can everybody hear me? Awesome. Thank you for the participation. Or maybe some back. My name's Emily French. This is in year 29 in the global agriculture arena, if you will. I started my career at Cargill and then have been off and running. All my clients are outside the U.S., so I have no U.S. clients other than the work I do for the U.S. Soybean Export Council. So my perspective is what my clients are doing in Nigeria, the Philippines, Bangladesh, Pakistan, parts of China, Southeast Asia, and old Europe, if you will, Italy, Spain. I think, suffice to say, it's still winter. It's still winter. I live in DC when I'm not on an airplane or not visiting clients or not at my home in North Idaho. I actually grew up on a farm in North Idaho, if you've heard me speak, so I keep a property out there as well. The challenge is this. World geopolitics are red alert, clearly. When you have the President of the United States threatening military action to one of our oldest allies, Denmark, when we go into Venezuela, the ongoing Russia-Ukraine war, the Middle East, saber-rattling in the South China Seas, et cetera. So what we've been trying to do in the last year is actually divorce ourselves from U.S. influence. Many countries are doing that. First of all, you have to remember that all of these executive trade deals or trade orders are not congressionally ratified. They mean nothing at the end of the day because there's no enforcement mechanism. So possibly, yes, you get the verbal and we're able to tweet, we've got these great trade deals and we're going to make America great again. What's happened in the last 12 months is the U.S. has made Brazil great again. Brazil is now on track for about a 180 million ton crop. 5 years ago, it was 140. BRICS is an expanding emerging economy, massive bloc. That becomes more powerful as those countries align and again try to divorce itself from the US. Try. Now, I would argue that, is it going to stay like this? No. Hopefully not. I think we're doing a lot of damage under deglobalization. The dollar is, the other buyers are moving away from the dollar. Central banks now hold more in gold than ever before. US debt, who's going to own it? And so what we saw in 2025 was actually the weaponization of commodities. The weaponization of semiconductor chips, the weaponization of rare earth minerals. That is going to continue to worsen, exacerbate, get bigger. And what we've seen is a China that recognizes it's still, as I said 2 years ago, fucked. It's still got massive challenges. However, it does not have the debt burden that the US does. So the key will be going forward is, do other countries and other central banks move away from US debt? Clearly, when you look at the 10-year yield, the 20-year yield, the 30-year yield, they would say, you're at 4%, that's still not enough for me, which is over double what it was 3 years ago. So that's problematic. I would argue that what we need in terms of agriculture specifically, you're not going to have a demand shock. If you have a demand shock, it will be bearish. So anybody hoping for a demand shock, don't if you want prices to recover. You need a supply shock. That is not going to come from South America this year. Brazil, again, looks very good. USDA is too low on both its soy and corn numbers. Argentina has a bit of La Nina risk, but the rains are pretty timely, and by the time we get into late January, we'll have a pretty good handle on what is likely to be a record corn crop out of Argentina, and that follows the record wheat crop that they just produced. So again, the rest of the world is kind of shifting away as much as possible. China is losing population, so you're not going to have the dietary shift that we've seen in terms of just solid numbers. So I don't look for China and its demand to pull us out of what I consider the paradox of abundance, right? Which is to say that on paper, rice, wheat, corn, soybeans, canola, and now palm oil are at multi-year highs. Supplies are very comfortable. It's a buyer's market. And you just look at volatility or the cost of options, and that is very reflected in that. Market structure will be very important. What do the funds do, right? So the Commitment of Trade report will finally be updated on Friday. So let's see what that is. We've got their index rebalance that starts on Friday. We've got all the USDA, the big reports, on Monday. And that really sets the stage for Q1. So I'm very interested in that. I think the US dollar stays weak. Obviously, again, debt. We're at 38.5 trillion. What's amazing, I wrote this down. Yeah, who wants US debt? It took 220 years to reach 1 trillion. And now we add 1 trillion every 5 months. We have a problem. The US has a problem. So to that, again, 2026 will start. The managed money will be very important to see the trade flows going forward. I look for them to actually be more on the sell side. Again, in 2025, we had a weak US dollar. And typically when I was an investment banker many lives ago, that was the investment thesis. If the dollar was weak, you bought commodities. Okay? Certainly that worked well for silver and gold, platinum, precious metals, some of the base metals, copper in the last year. Not so much for grains and oilseeds. So I don't see that happening. I am looking at the relative value trade. That theme is being thrown around. So that is probably something, I'm bearish, so I call myself, I'm not bullish, because I got tired of saying I was bearish. So I'm not bullish, but that is the biggest thing I'm watching to start 2026, is do we see money come in a relative value trade because they say corn's too cheap versus, gold. Soybeans are too cheap. So be aware of that. That might get you a little bit of a rally if you're a farmer and you have more to sell. But I think when you look at Brazil, so even soybeans specifically, they're about 31% sold. That's it. So they have to sell 69% more of their crop. For every 1%, that's 1.8 million tons, which is about a weekly crush in China. That is to say, you have a lot of overhead selling that's sitting on this market. So to that, I will wrap my comments with the crisis affordability. Certainly we're seeing that in the US. I think it's going to be really fascinating, the GLP-1. It's not just a US miracle drug, if you will, but we're really starting to see it impact some of our planning and trade flows, and changes to our product lines is to target that specific diet that complements the GLP-1 quite nicely. So I would keep an eye on that. Unlike Brazil, who has a very clear, this is our biodiesel program, I don't know what's going on with the US government. Even though I live in DC, I just grow baffled more and more every day. But the fact that we can't give clear guidance to people that want to invest in domestic crush plants or renewable diesel or biodiesel is problematic. Likewise, I think it will come down. Like everything right now, this administration is very transactional, and it's going to be big oil versus little ag. Place your bets as to who gets what they want, and those details will be late, probably Q1 of 2026. So if I'm, as an importer, because of the carry in the market, we're buying as necessary. We're not really concerned about price risk to the upside. Optionality, again, is very cheap. Money is still very expensive. Financing is still very expensive. So if I'm a farmer and I need to sell more of 2526, I'd be selling July 26 futures as well as March 27 to start your 2627. That is near about 1090 to 1085. If I'm correct with meal, and I think meal could go to 250 cash, you're talking about soybeans with a 9 handle easily. So I think that's a great place to start and a great place to catch up. Obviously, basis and volatility, that's going to be the biggest, I think volatility for the farmer will be the basis level. Corn, I would start my 2627 marketing, selling March 27, May 27. That's between 475 and 480. Again, use the curve in your favor, and then just try to work out some of these minor rallies that we're seeing. I mean, corn's just kind of oscillating between the 200 and the 100-day moving average, if you will. Again, I don't see a big breakout unless the US ending stocks somehow drop below 200 or 2 billion bushels or 2,000 million bushels or 50.8 million tons. So psychologically, US corn stocks are very comfortable. Profitability probably favors corn over soybeans for 2627. That won't help. So literally, when I look at the dynamics, you need a massive weather shock, and it has to come from the US. So also, if I'm a farmer, I'm maxing out on crop insurance this year. And then finally, to that point, do not expect the managed money or the trade money or the hot money to chase a weather problem in the US. They've done it. They've been burned now 3 times because the technology and the ability to grow a crop in the US is very proven. So you might have a lag effect, if you will, if we do have a weather problem in terms of the money coming out of that, but it will catch up on the back end once those are verified. So with that, I wish you just a wonderful 2026. You know, one day at a time. Don't be an asshole. Not a good look. I see a lot of them in Washington. Not fun. You know, stay, like the global markets are fascinating. The conversations I have at airports are probably my best investment ideas, or going dancing, or dinners overseas. I mean, the intelligent exchange is fascinating. Stay off Twitter. I think the Twittersphere is so toxic. I'm not on Twitter. Instagram, I don't do TikTok, none of that. Like it's not that I love technology, but go shake someone's hand. Because I think we've forgotten that most of us actually sit in the middle. And this divide of radical or mega has done nothing except create wealth for politicians that are never gonna know your name. So with that, thank you so much, and I hope I may get back from Pakistan.
Yeah.
Thank you.
I always like having Emily on stage, and I've got her strategically positioned next to Tom. Tom's the MAGA flag runner. Tom loves Trump, you know, and Emily, not so much. I had to speak at an event with Emily out at Grant Strom's farm. Yeah, look at them. They love each other.
See, this is...
I had to follow Emily at Grant Strom's farm, and I thought, oh my God, this is nuts. I mean, you could hear a pin drop in there. Emily got up. She was just bashing Trump, going nuts on it. But it was fun. It was fun. I mean, it was interesting, and I love hearing her perspective. And my perspective is very similar, probably on the corn and bean side of things. I'm going to defer to Mock. What are you thinking, Mike? Senior statesman, what are your thoughts on the markets?
Well, I agree with Emily on a lot of things. I'm a glass half full guy, so I'm going to avoid soybeans, and I'll let Mark and others, because that's really difficult to build a friendly case there. I think Emily's point about relative value is one to consider, and she mentioned very quickly, but I think one of the most important things of the big, beautiful bill is the increased subsidies for crop insurance. So number one, just insure the shit out of it. You know, I can say those things because Emily does every time, but I think it's really critical that we go that route. I also think, and Kevin alluded to this earlier, is you got to think a little outside the box in terms of how you handle it. So I'm going to start with wheat. I'm from the Toledo, Ohio area, and soft red wheat's very important to that marketplace. And people don't talk about it, but Monday we're going to get winter wheat plantings, which are going to be at the lowest in at least 5 years, particularly in soft red. I would not be surprised that we see a reduction year on year approaching 15%, and it might be higher than that. My contacts in Ontario see the same thing, 25% reduction. So if we see a soft red number, all winter wheat number, 31, 30 and a half or something, you're going to get a pop in wheat because that's the market that is egregiously short. Now, to leverage that, Kevin, and to use Emily's hedge values, which I agree with, Kevin and I talked here a couple weeks ago, we like having some D's corn sold in the neighborhood of 467 to 475. We've got some on. And against that, this week, I've been selling 510 Chicago July puts for about 20 cents, which creates, hopefully, a 490 kind of D's hedge. So it's a little outside the box. It's not for everybody, but I think the one commodity that could get in, even though we've got plenty of wheat on a global basis, but the Argentine crop, which is enormous, is off-grade, low protein. It's really a feed product, and I think it's actually longer term going to be a concern for corn exports through the second and third quarter than perhaps wheat. Now, if I'm correct about the wheat acreage number and we lose 2.5, who knows, even 3 million acres of winter wheat, where's that go? And this would be the year that potentially we could see the two-crop total of corn and beans exceed 180. That's been kind of a ceiling, but I would not be surprised that we find it very difficult to cut corn acres to the level that people have talked about. Today I would use something 95 and a half. You plug in a 182 yield, we have plenty of corn. Now, having said that, I don't want to get too far ahead of the game here, but we're in the camp. My friends at CGB are in the low yield camp and have been that way since September. And again, I'm in the east where we got rocked with very bad weather, wet spring, hot, dry summer. So we're using 182 for a national yield, but we need that kind of a low number. Given the fact that the feed and residual is too high, and the export number, although strong and better than almost all of us expected, liable to run out of gas later on down the year when we feel the brunt of the Argentine crop, the Argentine wheat crop, and maybe by then we'll get some more of this Ukrainian stuff. So I like selling old crop corn. Anytime you're north of 450, get caught up. We're underpriced in corn. Nationally, maybe 40% sold. We think we're better positioned in beans at 65% hedge. Farmers did a good job rewarding that market. I don't have a lot of good answers for you as far as new crop beans. My focus is using excitement, if we get it in wheat, to add value to what I may do in corn and bean hedges. One thing too, Kevin, and I love the fact that you post those positions that you have, but you didn't mention race. Race was up there. That's Ferrari. Is there, what's that story? Yeah. You're not a car guy, not a car guy.
No, I'm not a car guy, but I just think Ferrari's got a market. They got a monopoly on it. And I think every knucklehead kid out there wants to post stuff on social media, and they love posting on Ferrari and all that jazz. So probably the same type of line. I think Ferrari has a play in it. So longer term, we've been in it since the IPO on Ferrari. So.
Well, if I'm going to buy one or have my grandkids buy one, maybe they should do it now rather than later. Okay, Kevin, that's enough. I'm a glass half full guy. I think we can manage our way through it. It is not going to be easy. You have to be creative, and you have to set that floor below you. The government is providing a heck of a cushion there, and we need to take advantage of it. I'll leave it at that. We got other folks to hear from.
Yeah, and I think like Mike said, I got goosey on the beans this year, and I sold out. I sold out all the beans on that pop up above $11. When we got out, it was like 11.10, 11.20, because I could average over 11, and I thought that was my goal. And like I said, I sold out. Looking for a place to reown. I'm going to give it some time, though. I think, may drop. I think there's a bearish story. I'm going to turn it over to Switzer and let him kind of tell you what his thoughts are. I suspect Mark's probably bearish beans. I don't know that. Am I right, Mark? I suspect. But I'm also the same as Emily. I got about 20% of new crop corn sold, 20% of new crop beans. Kind of going to watch some things here a little bit. I'm optimistic about a few things, but I'll let Mark give his thoughts on where we're headed with where things are at. And you guys know Mark from ADM, years of ADM leading their team. And so, Mark, what do you got? What are you thinking, buddy?
Good morning. Kevin, to you and your organization and family, thanks a million for having us. What a great event to be able to get together and talk markets. And I know one of the, where are we headed? And what a big question. We could spend all conference talking about it, but I'm going to boil it down to two things. I'm going to keep my comments short. I know Gregg's going to say, yeah, right. But you could look it at me. I will say that, again, when I look at these markets, it's been happening for a long time. These are structural changes, not fundamental changes. And we have to remember as traders and operators how a fundamental changes from each year to each year. And the items we're going through are structural changes, and they're not going to go back. And let me give you an example. We all know the crop's 180 and 135 on the corn, 180 on the soybeans, and 135 in Brazil on the corn on the second crop. But think about what happens early next decade. You're 225 and you're 175. Run the math forward. And the point is these. We can go through, then we can move to China, and we Emily talked about population peak, and it's very easy when you start to think about China where they're at with population peaking, demand peaking, with all the technology that Mitch and his team and others are employing around the world. Yield is going to continue to go higher, and when you run those numbers in China with the adoption of the technology. And I know people don't like hearing this, but China could be a net exporter of feed grains early next decade. We're already seeing them export soybean oil, right? It's amazing to me. We got the agreement or the pledge on the 12 billion or 12 million met tons. They're up to about 10 million after Monday's purchases on that pledge, and it's amazing. The reserves are estimated to go from 35 million met tons in storage to 40 million met tons. And their exports of soybean oil continue to increase into Southeast Asia. The point of it is it's not being consumed in country, it's also now being exported on the oil. So we could see the same thing happen on the feed grains. The point of it is the structural change. We all need to embrace it. We understand it. We appreciate it. When I look at the market from a commercial, understand these commercial, looking at these fundamental to structural changes that are happening, what the market has to happen is we have to have, new consistent demand drivers that are needed for us to create solid demand, to get rid of the supply. It creates our profitability. And we say, okay, well, what is that? And it really frustrates me as I sit here and see, it doesn't matter what administration is in office. In late December, the Trump administration announced their meetings for trade talks on a global basis to help exports. And that to me is an absolute, exports, we're in a whole different era. 30 years ago when we were building markets, I get what we were doing. Today, it doesn't matter, there's no commitment, there's no brand loyalty on number 2 yellow corn or number 1 yellow soybeans. It's a commodity. I can get it from Brazil, or I can get it from the US, I can get it from Argentina. It is a commodity. It's hard to build brand loyalty with a generic commodity. And so when I think about all these programs that we're pushing for export, what we really need to be doing, and we need to be talking to our constituents or our representatives in our own areas, and always talking about what's the new catalyst for demand. And it has to be a domestic demand driver. When I think about ethanol, I was talking to a smart young lady earlier today about ethanol this morning, and ethanol, when it started and what it did for corn demand, and we use 35% of our corn crop in ethanol, as we all know, that's what I'm talking about. And we aren't spending our time on that. And again, when I think about ethanol today and I see the hurdles that we have in front of us, if you just take the algorithm that the EIA has projected to us, and we look over the next decade from 2025 to 2035, motor pool gasoline goes down, right? Better efficiencies, less driving miles, the efficiencies and technology of the automobile, miles per gallon moving higher. The point of it is, if you take their numbers that they gave us, in 2025, with about a 10.5 blend, we have 14.2 billion gallons of ethanol production. Run it on EIA's numbers on the same 10.5, the point of it is we only end up with 13.1 billion gallons of ethanol production. And I don't think anyone's thinking today that we've peaked yields anywhere in the US or globally on corn. The point of it is where are we going to go with the supply? One of the things I keep talking about, and again, ethanol to me is one of those molecules where I hate where it's policy, but unfortunately, that's what we're dealing with. If you have a 1% blend increase in ethanol, go from 10.2, which we were last year, to say 11.2 or whatever, you have a 1% increase, you get about 486 million incremental bushels of grind. Now take that forward to an E15, so 5 points, you end up with 2.4 million bushels more demand for ethanol. The point of it is, I understand it's going to be difficult for us to push against the lobby money when we're dealing with big oil, because we're taking away refining capacity utilization. But that's what we have to push for, is higher demand. One of the things I look at in the veg oil market, that market has been super complex since 2021 with RD. Over the last few years, we've been hyped up on RD, and everybody's talked about it. And it's certainly taken a lot of supply off the market, which is a good thing. However, because of global politics, specifically Indonesia with palm oil, and obviously the change in policy to where, under the Trump administration, to where foreign feedstocks aren't applicable for the for the dollars. Veg oil is in a real interesting point, in my opinion. And when I look at that and I say, oh, everybody talks about, well, RD is going to take the demand or SAF's going to take the demand. The same companies, just publicly traded companies, I went back and looked at publicly traded companies that are involved in R&D. In 2025, they're going to collectively lose over $1 billion. The point of it is it's very difficult to look at that projection of growth when the investor is seeing R&D not produce the ROIC that they need to have, and you're seeing other areas where venture capitalists are pushing money, and you see other areas where investors want to push their money. When they look at agriculture right now and they see a $1 billion loss in that market, it obviously asks a lot of questions. And I'll leave with this when I think about the oil market in general. You know, you've gone from a fundamental driven market in the world veg oil to a policy driven market. And everybody says, well, if you look back a few years ago, Mark, we had huge, comparatively speaking, increases in veg oil exports. That's true, we did. But if you look at last year, we were back down to our norm. The reason that happened was because of the palm oil discussion when Indonesia was going to go to a B40 blend. And so the market ran up. We saw this huge divergence between palm oil futures and soybean oil futures. Soybean oil stepped in, filled the market globally for the table oil, and we were able to get the exports. Now the market's got back on track a little bit. Production continues to increase in Malaysia. The point of it is that it doesn't matter if it's B40 going to B45 or B50 in Indonesia. It doesn't matter if it's ethanol in Brazil or what's going on with the Z45 in the US and the RVOs. We've taken veg oil from a fundamental driven market to a policy driven market, and that is always dangerous for us as producers. And so I'm looking at that real close and paying attention to that market and trying to figure out where does this all land and how does it move forward. And the last thing I'll tell you about policy-driven market, if you look at our corn exports right now, and our corn exports continue to be very, very solid, which is a good thing. And I asked somebody, I said, so what's the number one reason that we're seeing that? The only reason we're seeing that with 135 million metric ton second crop in Brazil is because of Brazil's internal ethanol program. If something would change with that policy, we're in trouble with those exports. And quite frankly, their domestic ethanol program is not going to keep up with 175 million metric tons by 2030, 2031, whatever you want to calculate the number. My point is, look, we've got a lot of things that are hurdles in front of us, but we got a ton of opportunity. I'm super ecstatic that we have a pro-business administration right now. And I'm going to say on our operation and what I know, we have to keep in mind in markets that are oversupplied, like where we are, and you see all this policy that I just talked about, we have to make sure we're selling forward. We have to hit the rallies. That's number one. And these funds give us a huge opportunity. Look what just happened. We had a 15% run up in soybeans on China going to take beans. Now, if you look at the global market and you put it all together, there's a huge cliff coming for the U.S. Future sales of about 60 to 70 cents a bushel because of the South America bean harvest. The point of it is, it's not long-lived. So we ran up to, I don't know, 11.35 or whatever it was, Kevin. We came back down, and the question is do we go back down to 10 bucks? I'm not an expert, not going to claim to be on that, but I'm just going to say the market completely gives us opportunities with this volatility and these policies and all this uncertainty. So we have to hit those rallies. And I think the last thing is our capital allocation. Kevin, you talked about it. We talked about it. I think Emily touched on it. Our capital allocation has to make sure that when we're doing capital allocation, it's in the nearby and we're hitting ROICs, that products that give us better yield and cut our cost. I mean, The iron, obviously we see John Deere's earnings. We know what's happening there. People are paying attention to that. They're cutting back on that. That's perfect. But we have to make sure that we're hitting the rallies, we're paying attention to our capital, and the consolidation in the farm industry, we know what's going to happen. We want to be the market maker in those consolidations, not the market taker. And those two things that I just talked about help you set up to be, you want to drive the consolidation for your operation or for your family, because you don't want to be sitting there saying, hey, Gregg, we want to get in a merger. Go ahead and tell me what the deal is. I want to be driving that conversation. So I'm going to end it there. There's a ton of opportunity amongst all this volatility we have. We just have to make sure we short the wheat and the chaff, so to speak.
Yeah, no, I agree. I'm personally sitting here. I got out of my bean short positions. I was outright short, spec-wise. Got out, took profits, kind of just going to watch this thing. Andy's still short. He's holding some short bean positions when we talked on the phone yesterday. Both of us are in agreement. I don't know if you're going to go back sub $10. I mean, Emily might think, what do you think? And maybe we go back sub $10?
If Argentina cuts its export taxes, which it will again,
Yeah.
I mean, if you look at the peso, their little
Yeah.
$20 billion gift didn't do jack to support their peso, so thanks for that. So their exports taxes are cut again, flood the market with exports again. So yeah, I think that'll be what takes it.
Yeah. So yeah, like I said, I'm going to re-own maybe somewhere in that 10-20 area, somewhere around $10. We could go sub $10, but the funds seem like they want to jump it a little bit. I'm optimistic about corn next year. We'll flip over to Doud and Willis because Gary Lezak's going to come out and talk tomorrow. Gary's my weather guy, and maybe it's hokey, maybe it's not hokey. I like following Gary. Gary's had some great weather data the last couple of years for us, like unbelievable. And I think there's some drought. I don't want to give away his punchline, but I think there's some droughts in the loop here, and I think they're going to be in some key areas possibly here in the U.S. So we get a break off this USDA report or some other thing. We get beat up pretty good in corn. I'll probably look to be a buyer at some point. So I'm a little hesitant on selling real aggressively as of yet. I think Mike is too. We're getting some sales in, but we're not going nuts, right, Mike? We're not going crazy with selling 26 yet. Just feathering some in.
Get a good insurance program in place. That's a heck of a floor, and nibble at it.
Yeah.
Get a little creative with it. I just wish there were easier answers in soybeans. There just aren't. We need some help.
Yeah, that's what I've always had. I've always had a tough time marketing beans myself. Just a lot of times, just let it get away from me. So that's why when I get a profitable opportunity, I usually take it. And that's why I said, and if you're going to have 80% coverage, I'd probably look to get 20% sold. I mean, cover what you don't have on the insurance side and move from there. So let's switch to Doud. Doud, what do you got? Cattle, Washington. Let's hear what's happening all over the place, buddy.
Kevin, it's good to be here. I want to just take off on the comments here. I'm going to say something pretty rude, but I think, Jordan, we need hats that say, for everybody in this room, I am not the low-cost producer in the world anymore. And from a structural change standpoint, we need to understand that, because we're not. And that's a shocking thing for us to say in agriculture, but versus that Brazilian where he can plant a crop of corn or soybeans or soybeans and cotton on the same acre in the same year, how do you compete against that? You don't. So we've got to think about what we're doing here. And the productivity gains are going to continue to be what they are. I want to talk about on the livestock side of the equation a little bit. I think USDA, U.S. government will reopen the Mexican border here on screwworm at some point. So I think we have to be a little careful with this cattle market. The point I want to make on cattle is I don't want to talk about how high we're going. We want to talk about and think about what the length that we're going to have in cattle is. And I'm just going to say, generally speaking, I think we have about 2 more years. On the dairy side of the equation, what's going on really interesting right now is we have the most dairy cows in the U.S. in 30 years, all of a sudden. What happened? That $1,400 day-old black beef on dairy calf. In the dairy industry today, we're sticking another straw of semen for another lactation, and if she gets pregnant, she's staying, not because of the milk production, but because of that $1,400 day old calf. We have the most dairy cows in 30 years. We've increased in milk production of 3.5%. We got milk all over the place, not only in the US. Europe is up 5%, Australia is up, Argentina is up. We've got milk everywhere, but I don't think that cow sticks around much longer next year. And our dairy heifers coming in, the numbers are lower. But and I'm gonna get into this point a little later on, with AI folks coming on the genetic side of the equation, we can do a lot more with fewer cows in dairy. It's the genetic changes that we have coming are really gonna be remarkable. Today in Washington is a really key day. Trump administration came out with the new dietary guidelines today. One of the headlines says, prioritize protein foods at every meal. So we talked about GLP-1s. If you're gonna talk about GLP-1s, ladies and gentlemen, you have to eat protein. This is all about protein.
Cottage cheese, boo-boo.
Cottage cheese, I don't care what it is. From a dairy perspective, they're coming out and saying the saturated fats and the sugars in dairy products do not matter. Whole dairy products, whole foods. This is the protein side of it. Again, I've said it since the day I left the U.S. government here now 6 years ago, or whenever it was. If you look out over the future, the supply of protein in the world comes nowhere near meeting the demand. So the protein business is what you want to be in some way, shape, or form. It's on the U.S. side of the equation, I think it's really interesting. We're going to grow at 4% plus. And you say, well, that's not sustainable. And the answer is, yeah, it actually is. If you look at the big, beautiful bill and what we did there in terms of tax changes, if you look at the money coming in and the investment and the reshoring and all of that stuff. Interesting, here's the key point on that, Kevin, I want to make. The big, beautiful bill, it was premised at CBO of 1.8% growth, is how they did the numbers on that. So if we're going to grow at 4%, what does that mean? That means eventually you're going to begin to bring that deficit down, and if we can grow at 4-something%, I think you're going to see mortgage rates and long-term interest rates begin to come down here a little bit. Now, it may take till later in the year that we see that, but I agree with the assessments that we're going to be bumpy here for the first quarter or two of this year, but by the middle of this year, folks, we are going to be rocking and rolling in this U.S. economy. I think I'm optimistic about it at all. But here's the point I want to make. We lost Congressman DeMalfa this week in California. We are now to a spread of 2 votes in the House of Representatives to do anything. To do another budget reconciliation, to do anything in Washington now, folks, it's gonna be really, really dicey. I cannot emphasize to you enough how unbelievably important the big, beautiful bill was to the United States of America going forward. Unbelievable that we got that done. I just don't know whether we can pull it off again. I sure hope we can. I think they want to. I think that's the expectation. But we're just going to have to see how all that is. The last political thing I will say with regard to the dietary guidelines and everything coming out, Kevin, is you had the chart up here, the Maha moms. The other thing I would say about the Maha moms, Kevin, is they don't want herbicides and pesticides in food. So how are we going to decrease our cost? How are we going to use technology in this space of agriculture to increase our productivity when we're fighting that? This is going to be a real challenge for us with consumers. Now, the answer is structural change. We've got non-synthetic herbicides coming out there. We can go the organic route on the pesticide thing here a little bit. You got a guy here that understands what some of these products are that are coming in the future. We've got to understand from an agricultural perspective, we have to help our urban friends and neighbors understand we still have to be able to produce food and how we're all going to do this. The last couple of comments I would make is China. Emily, you talked about it. Don't believe any of the numbers. The Chinese economy continues to be a disaster. All of the numbers are BS. Folks are getting older in China. there's no silver bullet in terms of Chinese demand anymore. But I am optimistic about Southeast Asia and about the fact that we can the question we have in the dairy industry is, can we grow with the deals that we're doing, trade deals that we're doing in Southeast Asia, can we grow those markets to replace China? And the answer in dairy is, yeah, we can. We definitely can over time. Indonesia is a great prospect. I think where I'm going to end it with, Kevin, remember what I predicted a year ago? Last thing I said here a year ago, what was it? Regime change in Iran.
Yeah.
Remember that?
Yeah, I remember talking.
I was a little quick, but you see what's coming. Things are changing in the world, folks. Venezuela is connected to Cuba, is connected to Iran. It's all connected.
No, I agree. And I think Gregg hits on the point that we've made for several years here. When a market deems it's oversupplied, remember, its job is to find, locate, and rip the face off the highest cost producer. Try and get them out of the business. Well, that was never the case here in the United States for years. I mean, we didn't look here. We weren't the high cost producer. Well, now, different ballgame. So you got to ask yourself, can you compete as a low cost producer? I mean, do you have all your equipment paid for? Is your land all paid for? Can you compete as a low cost producer? Yes, I can. Keep going. Keep doing what you're doing. If you can't, they're coming for you. They're coming for you, and you're going to have to pivot. And you're going to have to find some places to make changes. And you're going to have to look for those places, like they're saying. There's going to be opportunities. There's new things. There's new opportunities out there. Tom, give us some outlook on ethanol. Bright spot here.
I believe it's very bright.
And let me wait one second. The reason I didn't have my friend Walter up here on the soybean, the RVO, and talking about the biodiesel, yes, that's relevant here. I call that the future of ag. Ethanol's more established here. Tom, we're trying to build this thing and grow it from where we're at. We'll see if we can continue to grow, correct? Which is a little tricky right now, but go ahead, Tom.
Well, I'll try to keep my remarks somewhat short here. 3 or 4 things that I would leave you with. Number one, I think there are a lot of tailwinds behind renewables today. Your government policy, the 45Z and the big beautiful bill, there's opportunities there for agriculture. It's not just an ethanol play. We're waiting for guidance from Treasury on what I would call, and this is a Biden saying, I do it for my esteemed colleague here, guidance on sustainable ag, climate smart ag, I believe is what it was called. They say it'll be out by May, but contained within that is the incentives that will be paid for climate smart farming. Why is that important? As you look to the future, I think the growth comes from renewables. As Mark, I think it was you, somebody here earlier said 1% was worth 400 million bushels of corn. There's a market out there, guys, that's developing right now, and that's maritime. That's an 85 billion gallon market. They burn what is called bunker fuel, and that is the crap that nobody else will take. Why is that important? They can put in an ethanol engine to drive those ships at equal cost to what it costs to power them now. Maersk is developing engines that way. It's international rule. It's international law. That's what I'm bullish about. You know, in the United States, you can have things change from administration to administration. But when you look internationally, you have a lot more consistency. That could be a huge market for us in the United States. Certainly one we couldn't even come close to supplying. But what does a billion bushel extra demand do for the price of corn? Yeah. And that's what I think we're looking at. Number two, as it pertains to production agriculture, you're going to hear more and more of this, and if I leave you with one thing, take this away. Traceability. California, and this is on ethanol that we will be shipping to California, requires that I be able to track it back to the farm, the grain that was used in that. Now, that's ethanol that goes into a vehicle. How long do you think before they start to do it with corn and with wheat, especially wheat and things that go in human products? When we look at our export markets, and we export quite a bit, first thing that comes in, are you ISCC certified, and can you trace this back to the farm? So that's coming. It's coming. So that's the second thing that I would leave you with. Third, be careful of unbundling your carbon. I know there's a lot of people out there wanting to buy carbon. I'm going to put a pitch in for our industry. Because of the 45Z, because of the export opportunities that we have, the ability to combine a low CI production, making our ethanol low CI, getting to zero, is going to open up opportunities. But here's my fear, and I've talked with people around in our company, around our plants, is simply this. Somebody comes along, offers you 20 bucks an acre for your carbon, you sell it. That's great. You got 20 bucks an acre. 2 weeks later, Conestoga Energy comes out to your farm and says, we'll give you 25 cents a bushel for your corn premium because we're using it to make a zero CI ethanol, which we're in the process of making. Great, I want to sign up. But all of a sudden we find out that you've already sold your carbon. So for those of you that are around ethanol plants, because I'm here to talk about ethanol, be damn careful about bifurcating carbon from your corn. Don't do it. I mean, I can't tell you not to do it, but be very careful, because the real value, because the big beautiful bill out there, and that money will find its way to the farm, is in low CI production and traceability, and there's value there to be had. So we've never been closer to getting E15 done. I'll tell you from that opinion, never been closer. I think there's a good chance that we'll see something at the end of the month, and either whatever kind of settlement we have, a continuing resolution, or whatever they end up doing. I have no idea on that one. We are more aligned with oil than we ever have been. Now, I'm not saying that we're perfect, but we have an alignment that we've never had before. Trump, whether you hate him or like him, is not necessarily as stupid as we think. The road to the midterms, for him to get done what he wants to get done, he has to control the House in this next election. There are times, and I know, I believe, Emily, you made the comment that, big oil. That is true. Usually big oil carries the day. Big oil will not carry the day in this midterm. This midterm and this message, I delivered it personally to the president, as well as to some of his senior staff. The road to the midterms goes through the red states. It goes through agriculture. And you got a crisis on your hand. And if you don't do something to address that, you will lose the House. And your agenda for the last 2 years of your administration goes to hell. That's a message that's starting to resonate with him. We're not going to bring any cows on any too soon. We've talked about all the bearish news that's out there. And yes, E15 would take a year or two to get the infrastructure built out there. But it would be a piece of good news that he could deliver to rural America that, yes, I made year-round E15 available. It's a message, guys, that he's hearing. Oil will not get him the midterms. Rural America will. Rural America will. You have power. We have power. More power, in my opinion, in this election coming up than we've had in a long time. Make sure you use that with your representatives. Let them know how you feel. But so to kind of wrap it up, I'm optimistic that we get E15 done. I really am. I think we've never been closer, and I think we're going to get it pushed over the line. Traceability will become more and more important to your farming operations. There's money there. Don't give it away. Don't give it away. Make sure you check with all the available programs out there before you do that. And again, I know driving demand in the U.S. is going down, but you put that extra, you get E15 year-round, you're going to see a lot of infrastructure being built in the next 2 years that maybe we burn less fuel, but there'll be more ethanol in it. And I'm very optimistic exports. I'm very optimistic exports with what we can do. So I guess that's how I'd leave it.
Yeah, I appreciate it. Sure.
Just to follow on the traceability and regen ag and all of these things, certainly we've seen the EU try to push their EU deforestation regulation. That's again postponed for another 12 months. But what we find fascinating, when I say we, I'm talking importers, right? So non-US. What I find fascinating is that the US quality is actually very exceptional. However, the grading system of 1, 2, 3, 4 does not capture any of that. And so if you want to look at export markets and enhancing, there's so much great technology out there. I mean, look what this can do, right? Love-hate relationship, for sure. But I've continued to push for US exporters, and that is to change the grading system to amino acid profiles, to the actual value that is in a kernel of corn and the actual value that's within the soybean. Wheat's pretty good, like you have the falling numbers and the gluten numbers, and it's actually much more sophisticated, wheat trade is, as compared to corn and soybeans. And so that would be a fantastic competitive advantage for the US. But if we're gonna stay in this grading system and not have that realized, again, it's not difficult. But that would be a massive shift. That would be in favor of the US. So take that for what it's worth.
Yeah, I would agree. And I think that's where we're headed. And I think Carter and his group will explain that a little more tomorrow. Joe, Mitch, let's talk inputs. We getting any breaks? Joe, what are you seeing? Any breaks in the input prices?
We're going to have an affordability opportunity in production. And I would like, if you get anything out of my talk today about affordability, it's where you will invest. And I got a corn slide here. Kind of shows that we don't really have a great price right now, but it could be worse. It has been worse recently. And kind of like, Kevin, your slide earlier about where you peak and in your life, everything on that slide, I think, Kevin, was in your rearview mirror except vocabulary. And I am really excited to know how you're going to be able to add prepositions and how you can use the F word more frequently in your vocabulary as you progress. But our corn prices are the key to affordability. And if you go to the next slide, we've got 4 major nutrients now: nitrogen, phosphorus, potassium, and sulfur. We got to buy our sulfur now. We had high prices of phosphorus, and it's just now starting to break. If you go to the next slide, the bushels of corn to buy a ton of MAP has been over 200 twice. Last fall and back in 18. The last time in October, it was 220 to buy a ton of MAP. It dropped down to less than 100 in January. We've gone from 218 down to 147. That affordability rating is going to continue to go down. And the reason why is because farmers decided, I can't afford phosphate this year. I'm not gonna buy it. And that's gonna be the key in thinking going forward. Don't buy something that you can't afford. Just because you always put on however much phosphorus that your crop took off last year, don't do that next year. Spend extra money on potash, because potash is cheap. You say, well, maybe I should build storage. Storage is expensive. The cheapest storage for everything except nitrogen is your farm. You can put it out there on your farm. A year that potash is cheap, add potash. Don't put on phosphate. This spring, phosphate, that number might be down to 75 or 80 the day before you plant corn. Call your fertilizer guy up, say, hey, put on 300 pounds of MAP, it just got cheap. You got any on your hands? And he'll probably be glad to get rid of it because he knows cheaper prices are coming. So affordability, buy what you can afford and pay attention to your own bottom line. Throw away the University of Illinois Extension Excel template that they send out. Don't buy the stuff that you can't afford. Don't pay $300 for a bag of corn. Go to your seed corn guy and say, hey, I'm changing my yield goal from all I can grow to hanging around for next year. Let's shoot for 200 bushel this year instead of 280. What do you got that'll grow 200 bushel? And you say, well, we got this $170 bag of corn. It's really good. It's got a flex here. You can drop your population from 36 down to 28, and you're gonna save $40 an acre on your seed when you do that. And you say, sign me up. And then you're around next year, and you can afford what it is that is being sold. And we got too much food on the planet right now. You talk to anybody except the beef guy, and they have excess supply. Potatoes, rice, corn, soybeans, everything is oversupplied on the planet right now, so much oversupplied that we're burning our fuel, burning our food to make fuel. So I will end with the nitrogen is uncoupled from production. We've got so nitrogen is made from fuel. We've got a fuel crisis in Europe because they've been getting their nitrogen from Russia. I think CF Industries sent the drone in that got launched from Ukraine and blew up the third largest nitrogen plant on the planet that's in Russia. So our nitrogen in the U.S. is getting exported as fast as it can be built, and it's basically in just a couple of hands. So nitrogen outlook, it's gonna stay strong no matter what the corn price does because it's uncoupled from the corn price. Phosphorus is going to continue its decline, so be ready to make a purchase on that. We've got more production coming from Eastern Europe now on potash, so we are looking at soft potash prices. You got Michigan Potash and Salt is ramping up. They got a $1 billion loan from the Department of Defense to build their plant. Sulfur is high right now, but when this Venezuelan crude that's got all kinds of sulfur in it comes up to get refined, they'll scrub the sulfur out of it, and that'll put some pressure on the sulfur market. And when we're talking about affordability, you can also look at investing in yourself as well as your farm. You know, pick yourself up in the morning and give yourself a few push-ups or a jog or the pull-up bar that our leaders in the War Department are going after, and take care of the farm you got, take care of the body you got, and thanks Kevin Van Trump for giving me the opportunity to give you guys this broad overview of the NPK and S markets, and affordability is the key. Don't buy shit you can't afford, and make sure that you pay your vendor when you order it.
Is that right, Joe? Yeah, Joe said make sure he gets paid over there. Mitchie, we got you at the end to wrap it up. I've kind of ran over on mine, but I guess this is a great time. We were up in Wisconsin with Mitch this summer. I mean, just drove home the fact taking cost out of production, and I think Mitch and Rob and the team there have really driven that message home, and I like the message, and Joe's kind of played right into that, and so did Gregg Doud on the end, and Mitch, I think, hammered home for us the ways to take cost out and try to survive this little bit of winter and clip some good coupons on the good years, buddy.
All right, well, thanks for having me, and good morning, everybody. Like you, I'm looking for a bathroom break, so I'm gonna be pretty quick here. I think you heard the message. I don't have anything to add on the long-term outlook of the markets. Two things that it was mentioned twice today, and I met with my crop insurance salesman over the weekend, and for the first time in a long time, I felt good about farming. The big, beautiful bill has a lot of security in it. How many of you met with your crop insurance agent so far? Show of hands, have you met with your crop insurance agent? That's not very many hands. When you leave here, get a meeting with your crop insurance agent. Tell them it's not going to be the 80-20 you've always done. You want to understand PLC, ARC, SOC, all the new components that are being provided in crop insurance. We're going to have not great, but we're going to have survivable reference prices in corn, soybeans, and wheat. Reference price on corn this year after the PLC is $4.42. That's going to be about a 42-cent check this spring that will come if you had PLC, ARC coverage. Going forward next year, the premiums are going to be down. Your PLC and ARC coverage isn't going to cost you any money. You're going to be able to put in a security blanket for your operation, but you got to do it. You got to pressure that crop insurance agent not to take the easy way out and sell you the same program you've been buying the last 10 years. Make your crop insurance work hard. Push for everything that's in the big, beautiful bill. You got your farm bill with the big, beautiful bill. What we've got in crop insurance now is really, really strong. That's not futuristic marketing, but it helped me go to sleep at night to know that I'm going to have a chance to play again in 2027. Please spend time with your crop insurance agent. There's some good security in the program. That was really my main point. From a take cost out standpoint, I would say become a student of your soil test. I'm not one to say go out and cut fertilizer, but most of you in the room have built an incredibly strong fertility bank. If your P1s are over 21 on your soil test, you really got to question how much phosphorus you buy. You really got to ask yourself, am I buying it? The other thing you got to look for is new innovation. There's a tremendous amount of new innovation on the market to reduce your herbicide and fertility cost. They come in the form of enzymes and biologicals, but become a student of the new innovation. It's a path to take cost out of production, significant cost out of production. At Meristem, we like to think we can meet with each of you and take $100 an acre out of your cost of production without causing a lot of heartache. So there are ways to take cost out. Look for the new innovation, and for goodness sakes, don't miss out on the opportunities with crop insurance. Sign-up date's March 15th. Meristem doesn't sell crop insurance, so I'm not trying to sell you a crop insurance policy. I'm telling you as a farmer, if we can find an opportunity to market our crop this year at break even or above, I think there's going to be enough support in the crop insurance to get us through. I really do.
I appreciate it, Mitch. For those who don't, Mitch is kind of part of our family here. Mitch and I go back ways when they started Meristem. Mitch won Ernst & Young's Entrepreneur of the Year award this year across the whole nation and everything. So built one hell of a business over there. I tip my hat to Rob, Mitch, and you guys and your whole team. One thing I forgot to, now we'll get a break here. We'll come back, listen to Zach Cass. Everybody grab a bathroom. But one thing I forgot to mention, Green Lightning is going to auction off one of their 6-head units to donate the money to charity through a 501(c) that they have. So if you're interested in buying one, we'll have an auction come up, auction off one of the Green Lightnings. You can probably write it all off through the charity. So be a good opportunity if you're interested in one. So appreciate all my guests up here. I'm going to try and hobble off stage, grab a bathroom break, be back in here by 11.